Okay, here we go. Hello, everybody. Welcome to TraderMerlin Show. It is your Wednesday edition. Happy Hump Day, everybody. Talk about the tale of two market days. Yesterday, just some crazy, wonderful downside moves. Today, things looking much better overall. No major downside movements out there. Slightly negative for the S&P, which we'll look at today. Today's show, we're going to bring on a guest who we haven't had on in quite some time. She's always very, very busy, but you guys have been requesting her, so I reached out, and we're going to have Tillie Allison on the show today talking about this topic right here, which is earnings and the Fed with Tillie Allison-Harris. Tillie, how you doing? Welcome back to the show. It's been a while.
Great, Marlon. Glad to be here. Yeah, I'm feeling good. But a lot of my students were asking why I haven't been on the show, and for the last 2.5 months I've been dealing with asthma, and so I'm feeling better now, and hopefully I don't have any issues today.
We hope not. We hope you don't have any issues, period. But she's already got a nice glass of vodka all ready to go. You see she's just pounding the good stuff. We usually drink on Fridays, Tillie, but hey, if you want to start on Wednesday, that's more power to you.
I was telling a guy that was just here that I wish it was Friday already, because I'm like, hey, on Friday, Merlin has happy hour.
You got to let me know when you want to come on a Friday. I'll always welcome you. All right, well, tell me what have you been up to? I know it's been a long time. I know you've been under the weather and doing a whole bunch of stuff, but market-wise, I think last time we talked, you were still under the short-term short, long-term long perspective. We've seen markets rip to all-time highs. Of course, we'll talk about markets, we'll talk about earnings, and talk about the Fed. But let's get your overall thoughts on the markets as we stand now.
Market is still very bullish. We've seen no, S&P 500 specifically Dow, that there's been tremendous strength, just all-time highs again. Now at 4,400 S&P 500. A little bit of selling pressure today off of the highs, but that little bit of supply and selling hasn't broken any lows that would be impactful. So, will this correction turn into more of a cause or a problem? We don't know yet. So we'll wait and monitor the lows, and if any of those get broken, then we look for more selling pressure to come in.
All right. You literally wrote a book about the Federal Reserve, and I thought it would be interesting. Maybe we can talk about a little bit about Jerome Powell's comments today. I don't know if you followed what he was talking about. I know you probably were teaching today. But any thoughts on the Fed or comments about what the Fed's doing?
Well, it's interesting that the word inflation, so I haven't heard what Jerome Powell said specifically today, but I do remember that the most recent statement was regarding, what we all have referred to as, hidden inflation, that we all feel like it is being more talked about. Transitory, was that the last?
That was the word, yeah. He stopped using that last meeting.
Yes, and because I think people didn't respond very well to it at all. We all know that the packaging on products is getting smaller and it's getting more expensive. So for, the Federal Reserve not to address individuals, reality of, these prices being, quote, inflated while the size of the products is getting smaller. So I did hear him clearly state, I believe it was last week, Jerome Powell specifically, that the average American person has more income and the ability to spend more money, and that the market is, quote, resilient. Those were the words spoken. And I do agree with him 100% that the market is resilient.
Sure.
And we can dive into all the factors why. Number one, cheap money with low interest rates. But
I'm pretty resilient too if you give me unlimited bank account, right? I'll be very resilient.
How many of you guys today here who we have in the house, how many of you or your neighbors are like not as resilient as the S&P 500, and that your income has not risen and your spending certainly isn't, being, you don't have your credit card, just out, open, buy wherever you want. So I think that his statements regarding individuals' spending habits and their income he's kind of disconnected with reality.
Yeah, it's kind of strange. So the comments he made today, he did address inflation, and was interesting. He says, inflation's moderate, and if you look at the CPI, the PPI data, it's not moderate. It's literally off the charts, spiking. Of course, they're talking maybe long term. Yes, things always come back to average out over time, but how long will it remain in this very inflated period? And he actually went on to cite, he said, inflation is not across the board. And I kind of squint a little bit in curiosity, kind of like you were just doing. It's like, well, hold on a second. He cited the main areas that have super high inflation, which has been new car sales, used car sales, Airbnb lodging, and travel-related costs. But it's hard to have what we call shrinkflation, which is what you're talking about, which is where you have a bag of chips that used to be 20 ounces and now it's 17 ounces, so you lose 3 ounces of it, and it's exactly the same price. So inflation-wise, it doesn't look like there's any inflation. But it is. It's taking away my purchasing power has diminished, right? I buy less of it. And it's hard to do that with airlines, right? You're not going to say, well, my same $300 flight, I can't fly to Boston anymore. I can only fly to California. It's a misrepresentation to me of the economic and inflationary data. So Powell cited that, and he said, look, inflation, we're not that concerned. We think over the long term, it'll moderate. And he's probably right, but again, the question is, how long will it be heavily inflated like it is now? And for me, I don't particularly care, really. I'm not an economist. I just know that brings in more Fed actions and price movement in the future, which I'm excited about. But that's the Fed's job, is to get full employment and keep prices stable. I myself believe that they have a firm hand in the manipulation of this data to keep those prices looking stable.
Absolutely. And as long as interest rates are as low as they are, we see that the impact it's had on the S&P 500, the Dow Jones, all, big companies out there that are leading these markets are borrowing money, very, very historically low rates, pennies of the dollar. And until that changes, the companies themselves can continue to perform very well, as long as consumers can continue to buy those products. But that's where we start to have a disconnect is, the metrics to calculate consumer spending relative to the products they're buying are very, very skewed. Mm-hmm. We don't really have any calculations that show the direct impact that if consumers are, putting more on their credit cards and they're managing debt a little bit differently, anticipating that, maybe their salaries will increase. We don't have any of those kind of metrics. So we're just betting on the fact that these companies will continue to perform well because their debt ratios are so favorable because of their cheap money. Right.
Well, and I think that's the gamble of having cheap rates. It looks good for a while, and things do generally move up for a while, but nothing runs up forever, and I think we'll start to see some of those challenges in the near future. Brennan is commenting. He says inflation is actually over 13%. It might be. I'm sure there's some areas that are very inflated, well above that 2% target by the Fed, or the actual 4% number they're reporting, or 5%. Who knows? I agree with you, Brendan. I don't think prices are stable. I'm just looking at fuel price over the last 12 months. I'm looking at what's happened with lumber and corn and soybeans and wheat and just products I consume on a regular basis. Yeah, inflation is definitely a big deal. And how long is it? 40 years? Is that how long it takes to moderate? Maybe. But the Fed has done a masterful job of making people feel warm and fuzzy about what they're doing. When you look at the amount of money supply that's been created, there's not a textbook in history that will show you that much money created or put into money supply and not having a major inflation impact. It's just a case study in inflation and potentially leading to hyperinflation. It just hasn't quite hit here full bore yet.
Yeah. And I think what's amazing, though, is simply by monitoring the major markets like the S&P and the Dow, that week by week, as long as they're continuing to make higher highs and higher lows overall, we all know that the market can correct. 10, 20%, we get a COVID crisis or a flash crash. Somebody in Chicago shorts, 50,000 contracts of S&P instead of 5,000. The market's going to drop 20%. So we can monitor the market and see that it's still maintaining, quote, resilient, performance. Sure. And though it really looks at, now though, what does our portfolio look like? Because I actively trade the S&P 500, but in my portfolio, I have products that are hypersensitive to inflation. Many companies out there, I know a lot of the traders here trade all different kinds of products, and how are they going to react to inflation? But, our longer term portfolios, I know we have a lot of active traders here, but how many of you have long-term investments that may not be as liquid, and I have a lot of corporate bond ladders, and they're going to be hypersensitive to inflation, and some of those companies may not be able to pay their bond holders, and so I'm really have to prepare for that. There was a comment here, hey Brandon in the house, about shorting Bitcoin. So you will all be very surprised I am tracking Bitcoin futures, and you guys probably know more than I do about them because we can scale into them now with the micros. Now the question is, when does the volume roll into the rolling? We just rolled up the contract, right?
Right.
So, which volume and which contract is most stable there. So I am doing a little bit of research.
Wow, I'm marveled that Tillie is now in the crypto space. Here it goes. Here comes the next moonshot, guys. She's looking at crypto.
But unless it can perform as systemic as the S&P 500, years ago I traded the Dow. And whenever I found out that the S&P was more systemic, meaning that its highs and lows and measured moves and the market behavior to highs and lows and opens and closes was much more manageable, where I could trade it more efficiently. That's why I trade so many S&P 500 products. So
right.
Until I can see that kind of stability in any market, then I tend not to trade that very much.
Tillie, you've been trading for a while now, and you've had some volatile markets. What are your thoughts with regards to, I guess, addressing the inflation issue? And I'm going to go off the assumption that you're not that influenced by the talk track or even some of the fundamental data. You're basically going off of pure price. Because I was asking you, knowing that inflation is becoming a bigger talk track, knowing the solutions for inflation, which are raise rates, cut money supply, and raise reserve requirements for banks. Those are the three main weapons the Fed has. Knowing that some of those things are coming, have you changed your portfolio allocations in that long-term account to maybe hedge some of that inflation risk?
Not quite yet, not at the moment, but as we start to see any signs of selling pressure. So as we monitor, individual companies, the reason that I love to look at individual companies like Facebook, I've got a whole list of them here for us to look at today that were on your earnings
Facebook
sheet for this week here. Let me go here real quick. Facebook, is it PayPal, Bank of America? A lot of these companies are in my portfolio because I have holdings that they're gonna provide bond. They provide 6 to 7% consistent rate of return average. And that's not, the S&P 500 during a raging bull market, but these are bond ladders, and they're going to pay that consistently over time. So if these companies like Bank of America or, Ford or QCOM or any of them start to have very strong downtrends, then that can prevent them from being able to pay their corporate bond holders.
Mm-hmm.
So monitoring these companies weekly and monthly to see if they're, maintaining, relatively decent performance. A company doesn't have to be out gangbusters making, 20, 30, 40% return on price per share to be able to pay their, corporate bond holders.
Mm-hmm.
As long as they're maintaining stability and they're not, dropping under $5, they're probably still going to be able to pay their bondholders.
Sure. I have on the screen here, you won't be able to see this one, Tillie, but I'm sharing with the viewers right now. This is the earnings calendar for today, and I just wanted to throw it up there because there's some monster numbers. First one on that list is Facebook. Now, Facebook reported earnings after market today. It's funny because, they beat earnings. They had a 20 or 19% earnings surprise on Facebook today. So they came out at $3.61 per share versus a $3.03 expectation. You would think that that'd have a big spike today, right? Well, here you are right now on your Facebook stock in the after-hours session. You can see that big drop when earnings came out. Now, a couple other ones that Tillie mentioned on this list. You see number 2 there was Boeing. Boeing came out with earnings. That was a BMO, so a before market open, and you can see how they really surged this morning, ending the day up about 5 or almost a little over 4%. And then we did have a viewer that was asking about the number 3 one on this list, which was Ford. Ford just killing it on earnings. They were supposed to lose 11 cents per share. They came out at 13 cents positive per share. That's a 218% earnings surprise. Yet Ford, on the day, you would think that they'd be skyrocketing. Well, they're moving pretty good right now. I'll bring that chart up for you. Here's them in the after-hour session. You can see ever since they reported, it's been moving up pretty good. But all in all, not too bad on the earnings front. There's one more because Brendan is in here, and I know he wants me to talk about somebody at weed. Smokey Tilray reported earnings today as well. Now, this is why I don't trade earnings announcements. You guys saw Corey Lane the other day saying, hey, I don't touch earnings, and it's because of this crap right here with Tilray. Tilray was expected to lose 8 cents per share. They lost 11 cents. You're yelling at the screen going, you're going the wrong way. You're losing more than people thought in a period of time when, man, weed's hot. Well, let's look at TLRY. You'd think with these numbers that Tilray would be tanking right now. Here's Tilray's chart for today. It's up 26%. I mean, you would think that something it would have gone the other way, right? Here's your daily of Tilray. Now, still a lot of room to go to get back to its old highs. When Brendan was talking about this thing back in, when was that, Brendan? You were talking about Tilray when it was. Let me go to a weekly. I think when Brendan started watching this show, Tilray was, I can tell when Brendan started watching. It was actually in September, in August or September of 2018 when Brendan started watching the show. And I think it was like at 170, he was asking me, what should I do with it? I'm like, dump that thing. It hit $300 the next day. I was like, or a couple days later, I'm like, damn it. I wish I would have held on to it for you. There's your Tilray chart. Now we're down at $16 and a penny today on great earnings. Sorry, Tilly, I went long-winded on that one. I wanted to make sure I got that earnings calendar up there for everybody. With your portfolio, I know you're probably not trading the really heavy volatile stuff like Tilray in your long-term portfolio, right? It's mainly indexes?
Correct. And so, though, in my portfolio, I don't trade individual companies like this, but I do have them in my portfolio because they, I don't know if you guys know what fixed income bond ladders are, corporate bond ladders. And so I have those in my long-term holding. For active trading, I prefer to trade the S&P 500, the NASDAQ, the Dow, on occasion the Russell, crude oil, gold, products that are very systemic, meaning that they trade orderly, and when buy and sell orders come in, the highs and the lows, the opens and the close, we can anticipate price movement, we can calculate risk, and we can wrap a strategy around that. And it's 100% based off of price movement and supply, sell orders, buy orders, demand coming in the marketplace. You know, all you guys know, Online Trading Academy, we primarily focus on core strategy, which is identifying where to buy and sell solely based 100% off the chart. And then we can, though, like you said, have a great time with the public media. So whenever all the, CNBC, Bloomberg, Squawk Box is talking about Tilray doing this or doing that, or whoever doing this, doing that, charts don't lie. People have opinions. Yep. I'm going to be nice, right? Yep. So the chart, and anyone who trades solely off of the exchange data, we can laugh at all those stories and know that the market can clearly move the other way. I mean, back in the day, Online Trading Academy did all these special analysis on earnings report. Yep. And how you have a company that has earnings that's saying one thing, and then you're looking at the inside bid and ask, which is buyers or sellers, and it's doing another thing. And which side of the trade do you really want to be on? Right. So we know that the media and Wall Street Journal, whatever, CNBC, could be saying one thing, and the market's going to be doing another thing. And, we've got to be on the right side of the market. So, systemic chart traders, if you will, they're using core strategy or whatever strategy they're implementing are looking for market direction based off of market analysis, and know that those stories oftentimes going to be on the wrong side of the trade, because where's the retail public at? Right.
The wrong side. It's funny because I did a show. I can't remember. I've done so many damn shows here over the past few years, but I did a show recently that just was really about market manipulation and how you shouldn't really listen to anything that's coming from a news channel. I mean, I almost sound hypocritical because here you guys are watching the show, and it's like, well, should you even listen to stuff that Tilly is saying or stuff that I'm saying? And bottom line is, I think that Tilly and I offer a different perspective because I'm not being paid to do this. Tilly's not being paid to do this. We're here talking about markets because we love it, and this is what we do. A lot of these guys on CNBC, Fox, Bloomberg, they're getting heavy six-figure salaries to pump things at you. And again, imagine if your local news, your average, regular, everyday news was all good stories and feel-good stories, and things were always just fine and honky-dory and no big deal. You probably wouldn't want to watch it. Like, they want to have the triple homicides, and the lady that drowned her 17 kids in the swimming pool. That, as much as you hate it and such a sad story, it's like that's what people are watching for. They're watching for the horrific, sensational, just crazy. Like, why do we watch a police chase? For an hour and a half, watch a car drive down the freeway. I mean, it's like crack cocaine. You can't stop watching it. To me, that's mainstream media.
I want to know how close it is to my neighborhood, honestly. Like, if I'm, listening to the news, I'm like, okay, how close was that to my neighborhood? Because I have a toddler now.
Yeah, I guess that's a little bit different. I'm just, it's funny because the helicopters were circling above the house the other day, and I'm like, hey, it just wouldn't stop circling. I'm like, what the hell? And I looked, and on my Twitter feed. I subscribe to the police department in the local area, and it said there's armed criminals on this 2 streets that are literally like 2 blocks from my house. I'm like,
yes.
Oh shit. Okay, now I'm interested, but
that's what sane people are listening for. And then the other people who are just wanting to have fun, like you said, are watching it for entertainment.
Yeah, I think that most of TV stuff is just, I don't know, it's there to coerce us or do whatever it is to hook us. I mean, you look at the algorithms behind Facebook, what they're doing is designed to make you addicted, and so is the news. It's all sensational. So, I always say, you should never trade off the news. I think that's where I went on this random tangent. However, it's important to know it all and know as much as you can about what's going on. But you look at those earnings announcements today. I mean, Tilray, they should be down huge today on a bad earnings miss, and they're up 26%. And then you have Facebook, which should be doing great on their earnings, and they're down big. It's like, it doesn't make sense, which is why I don't trade them at all. Do you trade earnings, Tillie?
So I personally do not trade individual companies. And that's simply because I'm positioned in the S&P 500, and I'm monitoring those companies to see if they can lead or lag the S&P. But I'm going to get a more systemic and targeted rate of return on the S&P 500. So I can calculate my risk and my reward on the S&P a lot easier than I can on individual stock. And plus, the rates are higher to trade an individual company. And let me just share with you guys, following rules and having rules to follow, when we apply those rules to a company like Tilray, and you get an on the open setup, and so many minutes later it's trading above the open with no target, how are you going to play that?
Right.
It's giving you a bullish setup, but unless you know that company enough, or you're using some calculated ATR, like a 5 or 10 minute or daily chart, how are you going to target that out if it's, now got a gap and go setup, which is a gap up and it's trading above the open and it continues to go. And unless you specialize in those particular setups and you have those particular rules, it'd be very difficult to trade that without that set of rules.
Well, I mean, you've been doing this a long time, and you've learned. It's funny because Tillie was an admitted seminar junkie before she took classes with Online Trading Academy, which I guess was a seminar junkie as well for you at that point. But she ultimately stopped with Online Trading Academy and kind of saw the way things are really done. A lot of these, seminars are just there to upsell you a bunch of crap that doesn't work anyway. But I think the main takeaway and what I've seen Tillie evolve with over the years in a very big way is her ability to just admit that she's wrong and move on to the next trade. Take a loss, no big deal. And you can go to anybody's school or tactic or strategy, in my opinion, and whatever strategy it is, whether it's reading tarot cards or flipping a coin 50-50, as long as you have risk management in place, I'm under the belief that you'll do okay over time in the long run, kind of like normalizing inflation for the Fed. Over the long haul, you'll do fine. You may have some bad losing streaks. You may have some phenomenal winning streaks, but you want to make sure that those losing streaks don't lose everything that you got. And that's the real key to all of this anyway, regardless of news or anything we say.
Yeah, and it's amazing now because with micro contracts of the equity index groups, we can size into a position and trade very small contract size, only a tenth of the mini. So, we can get into trades with, like, literally, instead of having $500 risk, we can get into a trade with $50 risk and size into it and still have that 100-point target, but scale into it much more efficiently with less dollar amount of risk per trade.
Right. Let's see. What did Brendan say here? There's a couple of questions that Brendan sent in. Number one is, which comes first, volume or price movement? Which comes first, fundamentals or charts? I'll let you take that one first. Do you have a thought on which comes first, volume or price movement?
So those two are intertwined together, and because big companies and algorithms, they are scaling into their position. Of course, when the market explodes, there could be a volume surge. But if you calculate the preceding 10, 5, 2 hours, or 2 weeks prior to that explosion, that's what's truly causing the explosion, that all those investors bought hedge funds, algos. So volume is very low when they're accumulating. And whenever it does finally explode, that's what causes an extreme imbalance where all those algos and hedge funds that wanted to buy during that explosion did not buy. And was it Wyckoff said that the market moves with the least amount of investors on board? So volume is definitely part of that equation. But that's why we anticipate when the market does return to a price point where there are professional buyers buying, more volume isn't going to show up. So it's really volume is a process, and over time, as that price point and those orders are filled, volume will obviously increase at the time. But by the time you visually see it or notate it, the market will have already moved. So it's really, I think, anticipating that volume will increase and being comfortable getting long or short before the volume explosion occurs. Because if you wait for the volume explosion to occur, where's the market going to be?
Right, right. For me, it's I'll give you a simple analogy. When you look at, you said which one's first, volume or price movement. Without volume, you have no price movement. So if you have zero volume, things do not move. It's impossible for it to move if you have no volume. So I agree with Tillie. They're intertwined. You can't have one without the other. To your second question here, which comes first, fundamentals or charts? Now that I have a totally different belief system in. And Brendan, you probably relate to this one better. Think of Shiba Inu coin, right? It's a shit coin. It does nothing. It serves no purpose, has no use case application. So its fundamentals are what? There's no fundamentals, but do we have a chart? Yes, we do. So to me, a chart comes before fundamentals. A chart is just simply representation of a transaction. Could be on anything. Doesn't have to be fundamentals. And you look at a lot of these shit coins, which don't serve any purpose whatsoever. Tillie's laughing. This is an industry term, Tillie. I'm not being rude or vulgar. It's an industry term. It's called a shit coin. A lot of these serve no purpose, right? They're just scams. So they have no fundamentals whatsoever, but they have a lot of price action. So the chart itself is just a representation of transactions and volume, in my opinion, and price movement. Fundamentals don't have to play a part in it. Of course, I agree with Brendan here saying long term. If you're looking at long-term investments, I strongly encourage you to look at fundamentals. And I believe that you're right. That's much more of a due diligence process. Trading, I would disagree with you a little bit, Brendan. You say you're happy to trade any zone. I'm definitely happy to trade any zone. There needs to be some qualification of every zone that I'm thinking of buying or selling, whether I'm long-term or short-term. Let's see, Tillie, what else do you have cooking on your plate? So we talked about the Fed. We talked about earnings a little bit, and I don't know what else is going on with you. Anything else you want to sprinkle on the show today?
Oh my goodness. Well, recently someone talked about ETF having some fixed income, like 6-7%.
Okay.
Payments of like a bond.
Yeah, yield. Well. Yep.
And I'm thinking about this obviously because sooner or later the market, we're going to have a crash. It's going to happen.
Yep.
I anticipate it will be within my lifetime. Right?
Wow. Hold on a second. You're going out on a limb there, Tillie. In your lifetime?
Really disappointed. Yes, I'm going to be really disappointed if this bubble just is like, and it's never a bubble until it bursts. But, if this thing just, somehow magically just keeps, if the market is like, I don't know, we're at 4,400 today, it'd be like 44,000, right? I mean, I just don't even see how that's possible because market prices, with the S&P, even the ETF being at $400 per share, how feasible is that for a mutual fund or a hedge fund to buy shares of the S&P 500 at that price? And how long can they sustain that investment value? So the benefit of having inflation is that when interest rates do rise, it typically does cause companies to have to borrow money and leverage out, and it does cause debt crisis. And every crash we've ever had in history is a result of debt and mismanagement of debt. And it's like a forest fire. If the S&P drops 75%, that's going to be a wonderful time to buy into the S&P 500, anticipating that when interest rates are they cut again and we have another expansion, that these cycles that we've experienced historically, when we have another cycle like that, that's when we want to definitely allocate into the market at those low prices and be long the market for that bull, 10 or 20 year now going on potentially, bull cycle that we haven't had yet. Right now we have the longest sustained bull market cycle. So I'm looking at products that will be more manageable during the crash because I do anticipate that, one day we're going to wake up and the market's going to be down 20%.
Yep,
and
I agree.
Then 2 weeks later, it's going to still be down 20%. And that's when we start to have the signs that, we could be very well seeing the impact of inflation. So
I've got the chart up here. Let me bring the chart back up. Since you mentioned 75%, I know a lot of people are thinking there's no way in hell the S&P is going to fall 75%. And it is a massive stretch. That's for damn sure. But if you look at how big money pumps have impacted the market, yeah, you get these great bull market rallies, but they're usually followed by some very pronounced strong downturns. Now, I don't think we'll be down 75%. That'd bring us all the way down to 1,100 on the S&P. 1,100. I mean, that's way down there. But I do believe that we could easily see a 50% retracement in the S&P, which is a very common number. That puts you right around 2,200 on the S&P. And I think that is a fairly logical target. It's pretty incredible what we've done since February of 2020. I absolutely did not see this coming. If I did, I obviously would have bought my 420 call options versus buying 420 put options. But unfortunately, I was on the wrong side of that one. But I do think as you see this acceleration on this chart here, it's the steepest, sharpest rally you've seen in anything on this chart, and it just doesn't want to stop. At some point, it will stop. Everything stops at some point. Even Iron Man, when he was shooting up to the sky in Iron Man 1, at a certain point, he just couldn't make it any further, right? And he stalled out and then came crashing back down to earth. I think that's what ultimately will happen in the markets. And hopefully all of you here will change your mindsets from bullish to bearish. And when you have proof and when the market says, hey, now's the time to be going short, you load up and hopefully we can all be talking great stories about not only did we buy the market dead lows when it falls, but we made money all the way down. That's the key to trading.
Yeah, and we'll never know when the quote dead low is, right? It's only after the market reverses and then it's back up 20%. Do we look back and say, hey, we scaled into that and we were pretty darn near one of those lows. So we never know when things are going to happen. I always say, I know where the market's going. I just don't know how it's going to get there.
Right.
And having an allocation ready to go, and I don't trust gold 100%. Currencies, I'm starting to be more willing to obviously look at different currencies, even quote shit coins. That's hilarious. Oh my goodness. So money flow, whenever it flows out of the S&P 500 individual companies. So whenever I say S&P 500, everyone, you all here today, that represents every company you can think of, generally speaking. Sure, there's going to be some companies that can perform better than others. But, generally speaking, overall, 80, 90% of the stocks
sure.
will move in tandem with the S&P. So what can we allocate into, and how much, how many investors hold on to their stocks during that cycle? So doing some reallocation and moving into other products, currency markets, commodity markets, something that's going to actually appreciate, in value, or at least hold its value for Pete's sake, during a market crash.
Absolutely. All right. Let me. I had charts up here. That's what I was looking at. I'm just kind of curiosity for the viewers out at home. Tillie talked about the S&P kind of being the market, and I agree. I think that the S&P 500 is the dog that wags the tail. But just out of curiosity, just to get the chat engaged here. I know we don't have the biggest audience today, but what would you guys? What's the index that tracks everything? Not the S&P, not the fragmented little tiny. Dow Jones Industrial Average and the NASDAQ 100, those are all segments of the market. Which index tracks the entire market? It should be a pretty common one. It's kind of funny as I wait for the talk or people to type in a chat here. Come on, everybody can type in a chat, not just Brendan today. Brendan's dominating. Patrick will get your question in the book in a second. But it's funny because you have the NASDAQ 100, which I believe is now actually over 100 stocks. You have the Dow Jones Industrial Average, which is 30. You have the S&P 500, which now is about 503. And then, since nobody's typing, or maybe I'm just stuck with the long-winded delay, it's good. The Merlin Index, Tom. Yeah, it's not the Russell, guys. It's actually the Wilshire 5000. So it's
got it.
Yep.
Good job.
Leave it to the NASA engineer educator to get it. Good job, Les. Yes, it's the Wilshire 5000. Of course, almost I don't know anybody who has traded that index, which is kind of funny because you're like, if I want to go along the market, I'll just buy that Wilshire 5000 portfolio, right? There are some ETFs out there that track it, but I honestly don't know anybody who doesn't. Tillie, it's kind of funny. Even in the strategic investor course, you guys don't really you would think there would be. Why not? You have the S&P, NASDAQ, Russell, Dow. Those are key. Why not the Wilshire 5000? Why is it the redheaded stepchild of the ETF world?
Because I don't believe that the Chicago Mercantile Exchange and the New York Stock Exchange have created the amount of vast products to to allocate and trade into it. So, portfolio managers, fund managers have to obviously buy into markets to create enough volume to make them popular. And that just didn't happen with the Wilshire. And I truly believe it's because, maybe you've heard of diversification. Well, what about diversification? Sometimes if you got so many products in a market, how do you calculate their movement? How can you break it down? With the S&P, we can break it down to now 11 sectors. And we can identify which are leaders by percentile and laggards by percentile and wrap our head around it. It's logical. Now, if you've got such a massive, big index like the Wilshire, hey, we can get a ballpark picture of what's moving, but it's going to be much harder to run systemic calculations on percentage movement within that group. And if you're going to trade options on that particular market, Chicago and New York haven't made it very well known that those are safe to trade and that one could target an annualized rate of return. And it's always been said, if it can't beat the S&P 500, trade the S&P 500.
Right.
So just because Wall Street hasn't made that index popular, and probably because the options market, the futures market have not been developed and they're not mature markets like S&P, NASDAQ, Dow, Russell.
Well, for those who are wondering, I will bring up a ticker symbol for a Wilshire 5000 ETF. It is the Vanguard Total Stock Market, but really it's the Vanguard, or the Wilshire 5000 was kind of the name that was given to it a long time ago. Vanguard came in and made their own, but VTI is the ticker symbol for the total market index. So anyway, I don't know why I randomly went down that rabbit hole of the broad market indexes out there. Let's see. Oh, Les, I was giving you too much credit. You're just an educator. Come on, I'll give you the engineering credit. You get to join the education credit. All right, Tillie, tell me about your upcoming classes. I know you're obviously in Kansas City. You've always got tons going on. Any upcoming classes, online or otherwise?
We start class here in Kansas City in August, and we have regular classes now. We just had a futures class, and Don Dawson was here teaching.
Wait a minute. Hold on a second. Wait a second. Don Dawson was there?
Yeah.
I have called that guy a dozen times. He won't return any calls. I want to get him on the show to talk some commodity space. All right, I got my work cut out from him. I'm calling him up again today.
Yeah, I can maybe make that happen. No problem.
Make it happen. I got people who are dying to hear what he's got to say.
Yeah, so I do know that he does do some online Zoom meetings for OTAKC. So I think he might be open to doing something like this.
Better.
Yeah, I heard he also likes to have happy hour on his show, or not his show, but his, whenever he does do something internet web based. So
well, I'll bring him on a Friday then, to be sure.
And I think Scott Stokes will be here in Kansas City to teach a Forex class. So we do have classes. I personally am excited to go to Monterey, California in August. I'm going to be in Northern California. There's the Monterey Car Week mid-August, so I'll be traveling there for fun. So
when your hubby's out there, doing his car thing, skip the car thing, take the little one, and go to the Monterey Bay Aquarium. It is one of the best aquariums in the world. It's amazing.
So, I figured that you'd have some great ideas for me. And you guys all know that Merlin is originally from Northern California, and that's like a different country compared to SoCal.
Yeah, we were going to secede from the Union, split it in half so we can keep the NorCal safe, and just sell Southern California our water. But if you look at my front lawn, you'd think I have no water here anyway. All right, last question here. Brennan asks, have you ever read The Misbehavior of Markets by Benoit Mandelbrot? No, I'm not really a big reader. Probably one of the only books I will read are books that are written by my friends or have been given to me by my friends, like Tillie Allison's book about the Fed. I have read that book. But no, I have not read the one by Mandelbrot, although I'm a huge fan of the Mandelbrot set and fractal markets and fractal things in nature. But Tillie, have you read that book?
I believe I read bits and pieces of it. So I'm guilty of rarely ever reading a book front to back. I tend to pick and choose and read parts of books. I'm not sure that they're ever written in any order that they want the reader to read it, from front to back. So I've read parts of it.
Just the select pieces. All right. On that note, I know your last book was on the Federal Reserve. I will bring that. I think I have it up here since I've got 15 windows open. Here is Tillie's book. It's called The Fed Effect, The Centralized Federal Banking System. You can get that over at amazon.com. Just type in Tillie Allison-Harris or just The Fed Effect book. That said, Patrick wants to know, he's one of your biggest fans out there. Maybe one day we'll get Patrick an autographed picture or something. But are you writing another book right now? You got something in the works? I know you said you were talking about it, but
I do, and it is specifically the S&P 500, and going to include a lot of very common known things about the S&P, but really eventually break it down into passively investing in the S&P 500 products and then also actively trading them, because I do personally believe that the S&P offers enough diversification itself to actively trade it for income or investment for passive investing, options on S&P 500. So I have been working on it a little bit, but would really like for the market to I truly like to, I guess I could just solely base off of this raging bull market cycle. Because I really don't like to go back too far in the past. And I want to give examples of how to make money quote in a bear market.
Yeah.
And kind of hard to do that whenever we haven't really had much for me to work with. But I could probably pull enough off the COVID crisis.
I think it sets the book up perfectly, though. You say, look, if you started trading in 2009, you really haven't had a bear market. Yeah, the COVID drop in February of 2020, that's about it. But nobody here, no offense, I'm not being condescending, but most people here have not had that period where it seems like just week after week after week, the market just keeps drifting down and lower, and you're like, is this ever going to end? You end up buying the bottom as you think it's the bottom. It just keeps on dropping. You have to flip that mindset, and it's not like it is now where you flip your mindset for like a day or two to go short, but not like weeks or months at a time. That bear market's coming. It will come, and I'm hoping it happens sooner rather than later, because some of these short positions are killing me. But I think that'd be a perfect subset of your book is, here's the bull market. Everybody does great in a bull market because we're taught to go long, and it just keeps on going. But when the change comes, here's how you might approach it. But I don't want to write your book for you.
Well, we do have the 2007 crash to pull from, and then if we, take all the factors that, impacted that, and then scale it out to what will be, the next crash, then I could provide enough of a foundation to probably run some numbers so someone could wrap their head around it.
Yeah. Cool. Well, I'm looking forward to your latest book. Hopefully that'll be out. Yours will be out before my book is for sure, because my book will never be out. That's the white elephant. Will just never go. Anyway, thank you, Tillie, so much for coming on. I'm glad you're feeling better. I'll try to get you back to our monthly recurrence of you on this program, and maybe we can even get Tillie's chart of the week once in a while. Maybe chart of the month, just to get you the monthly start off to how our market analysis looks.
Yeah, I think monthly would be great until we really have a reason to have weekly, because it's just status quo.
It's just Groundhog Day. All right, Tillie. Well, hey, thank you so much. Say hi to everybody out there in Kansas City for me. All the best, and I will see you soon.
Great.
All right,
bye, guys. Great to see you all.
Guys, that was Tillie Allison-Harris getting us a little bit of talk about the Fed, a little bit of talk about earnings, a little bit of talk about her new book or potential new book. I know. Write my freaking book. Patrick, it's weird. I get so bored writing my book, and I just get frustrated with it, but I'm sure for some people it would be really exciting, but I just get so bored with it, and I'm unhappy with it. I just need to bite the bullet and be done with it. All right, let's see what else I can talk about. Oh, let me go to what we've got cooking for mañana, just so I can get that stuff out of the way. Now that I realize we're at 45 minutes on the show, we talked about the economic earnings calendar this morning. This was a pretty big day with regards to earnings. Ford is just I'm blown away by how much they beat earnings by, and this might be a good sign for them. Maybe it's just the pre-orders for the Lightning truck, or just the chip shortage causing them to make more profit margins. Who knows? But a great earnings announcement. Here is your economic announcements that happened today. I bring this one up just because we had the Fed funds rate stay the same. It was really more about the talk track that Powell threw out there, talking about inflation, etc. And really said rates are going to stay at the same level for quite some time. At least that's what it looks like. Now, for tomorrow's earnings announcements, after market close is the granddaddy. Amazon will be reporting earnings tomorrow after the close. Also, tomorrow after close, Twilo, Gilead Sciences, and Merck will be. Oh, sorry, got that wrong. It's going to be aftermarket is Amazon, Twilo, and Gilead. And then before market open, we have Merck, you have Altria, and you have MasterCard. Now, those are just some of the beginnings. of earnings season. There's many more tomorrow. I think there's 193 tomorrow, I believe, coming out with earnings, and I'm only showing you like 6 here. So careful with the earnings calendar tomorrow. There's a lot going on, but the big dogs have already reported. Now, here's what we have cooking for tomorrow. I didn't get a chance to clean this one up. As you can see, this is the fundamentals, the economic data for tomorrow. A lot going on around the world. Really, the U.S. is in the middle of the screen there. I'm very curious to see how the pending home sales come out, and also the unemployment claims. Remember, we had an unemployment claims pop up last week. We also have advanced GDP, which are expected to soar over the previous reading of 6.4%. They're thinking it's going to be 8.5. My guess is they'll probably be pretty close to spot on with that one. So that's your major stuff happening for tomorrow. If you're trading anything related to Japanese yen, you do have quite a bit of stuff happening with Japan, including their unemployment rate, their retail sales numbers, and housing starts. But that will be happening tomorrow near the end of the day. All right, let's see. Ford Mach 1 ebook took 10% of Tesla market share. Really? Wow. Awesome. I like that. I actually was looking at that Ford, and I'm like, man, I've never owned a Ford before. The reputation in the past has always been just trash, but now it seems like they're getting better and better and better. So maybe my next vehicle might be on the EV side, but I'm still probably going to stick to the truck. If they can come out with the Toyota Tundra in an EV or hybrid model, probably want to go just EV. I don't want to do a hybrid. You got an electrical system you got to worry about, and a carbureted system to worry about, or fuel system. Too much of a pain. Give me one or the other. How about $5? They go literally into 5 courses. So I see it says Merlin has come to some great life lessons you can talk about. That's what we want. That's pretty much what the book is. I already have 100 plus pages. I think it's almost 200 pages written in the book. I just go back and I keep rewriting it, trying to make it fun, make it more engaging. And the sad part is this. On this program, I've actually tried to keep things PG, not even PG-13, but kind of keep it G to PG. I'll curse every now and again, but I generally have a potty mouth, and my viewpoints on some things might be very cynical to most people. And so a lot of the talk track that I've written, I'm kind of going back through and changing it a little, softening it a little bit, but I'm almost too concerned that people find it offensive. Buy BMW, Lufthansa? Why? I was born in Munich. I should be buying BMW, right? Go with your homeland car. I think my... what is it when your sisters, or my cousin's son, what does that make it, a nephew? My nephew actually works for BMW in Germany, which is pretty awesome. Tom says, I'm a General Motors guy, but Ford F-150s are good. Yes, exactly. And not only they're good, I think that they are, my good friend bought one a few years back, and I'm looking at that F-150 going, man, that's a nice truck. And I do I'm a truck guy. I think I'm more of a utility and practical vehicle kind of person. Honestly, I think we talked about this before, but if somebody gave me the Tesla Roadster, which is $250,000, I would immediately take it down to Newport Beach and beat the hell out of it for 2 days, and then I would go and sell that thing. I would sell it right away, sell it for $200,000, take that $200,000 profit and buy myself a fully loaded Toyota Tundra 4x4 double cab with the full off-road package and all kinds of great camping gear, etc. Anyway, there we go. So that will be chapter dedicated to Sam. No, but there is, you know what, it's funny you should say a chapter dedicated to Sam. Good old Sam. No, but there is a chapter dedicated to how there are in the trading world people who are lower than low. There are people who are absolute scum of the earth, and they create an impression that they're something other than what they truly are. And they create a following, and it almost becomes cult-like, where these people become brainwashed that this specific person, or even an entity, is very, very good at what they do, and they're the best. Yet when the numbers are investigated, or somebody goes in and checks behind the scenes, they're liars. They're flat out liars. And you can actually go through and see, like, people will go and sue these individuals, but then that individual will all of a sudden come out with more lawsuits that it just doesn't make any sense for them to fight him. It's Brendan says, the bottom feeders. It's unfortunate that anytime you deal with money, you're going to have these bottom feeders. Anytime you have money, you get scumbags out there, liars, cheats, and thieves, and it bothers me more than anything. Yeah, they're in every business. Every business. The challenge with the book, Patrick, is I'm not calling anybody's name out particular. I mean, there were years ago, there was a gentleman, actually it's kind of, I won't even go down that path. There's a gentleman in the industry who, he started multiple companies. Very, very similar to what Sam's doing, right? He starts all these new names and changes his company name. Why? Because if you look at why he has to change his company name, there's all sorts of problems behind the scenes. But don't let the public know about that. We're great. We're amazing what we do. This guy was out of New York City, and people were suing him all the time. He has so many lawsuits against him. And then if you were ever caught saying anything negative about this individual, he would slap you with lawsuits, even though, you probably he didn't stand a chance to win. It's just that whole lawsuit litigation thing would freak him out. So there are some people in this industry that I do mention in the book, or at least talk about how to spot these types of people. Generally it's about false claims. A lot of them are making fake claims about what they do. And again, I can manipulate any data. So if someone says, "Oh, can you show us successful trading records?" Sure, I can show you all kinds of trading records. Why? Because I'm not winning it. I'm not making money in all my accounts. That's for damn sure. There's some that are actually losing some money. That's fine. Overall, as a basket, you want that whole thing to be making money, but there are accounts in there that lose. So if you ask me to show how my trading's going, you think I'm going to show you the ones that are losing? No, if I'm one of these guys, I'm going to go out and just cherry pick which one's the best one out there, and I will grab that one and I will show that to you and be like, "See guys, I'm making tons of money." And next year, that account might be the biggest losing account I have. Doesn't matter to me, because I'm going to go out and show you another account which keeps saying I'm winning, 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 winning. That's the typical way the industry works, and it's frustrating that shit happens, but it is what it is. All right, enough of that. Tomorrow, I'm going to have Bill Addis back on the show. I know some of you hate bonds. I saw Brendan go, "Ooh, bonds, hey, necessary evil," and there's plenty of opportunity in there, especially with some of the leverage offered on futures products. But we're going to have Bill Addis on the program, see what he saw. I look at the things that Powell said today at a high level. I didn't see any real change. The only thing I noticed a little bit in his talk track was it sounded like he was being a little bit more concerned about inflation. The talk track, he was using words like moderate growth, etc., and kind of picking higher. Like he's raising that bar on the inflation number here and says that they're not going to do anything unless they have to. Now, there was a question came in earlier. Let me see if I can get the gentleman's name because you typed it in, and I wasn't avoiding you, brother. I just was rolling with Tillie. Alvin Barrage. He asked a question, I think you retracted it, but you said, can the Fed just raise anytime they want? The answer is 100% yes. If Powell and the Fed wanted to right now, they could raise by as much as they want. You want to raise it a full basis point or 50 basis or 100 basis points? They can do whatever they want. And to give you an example of that, back in, I think it was 2000 or 99, in the middle of a trading day, I'm sitting there, I'm short the markets. I had probably 1,000 shares. I don't remember exactly, but I think it was 1,000 shares because that's normally what I was doing, trading 1,000 shares at a time. It was 1,000 shares of, I think, Exodus Communications, and I was short 1,000 shares of Exodus. And Greenspan comes out, and all of a sudden, Greenspan didn't even say anything. I didn't hear it. What I saw was my chart looked like, here, I'm going to show you guys exactly what this looked like. And if you ever experience something like this, you got to know what's happening. It's crazy when this stuff happens. So here you have a chart of the S&P 500, and I'll show you the chart there. Here's your S&P. And you guys can see, if I do it on, like, say, a 5-minute chart, 5 minute, don't worry, Tom, the show will be done in 6 minutes. Yeah, here's a 5-minute chart. So you guys can see the trading activity over the course of the day, right? Big fluctuations, right? Big swings. So when all of a sudden, my chart went like this, it looked like that, everything was fine, I was short, it was trending down, looks good, and all of a sudden it goes like this. My chart went to a flat line. I mean, it literally looked like this. I was like, what in the hell is going on? And all of a sudden, off the side of my screen, the chart went like this. It was just parabolic straight up on the S&P 500. Why? Because Greenspan came out and said that they are cutting rates by 50 basis points. Of course, they were trying to stimulate the market, so that must have been in 2000 as the market was selling off. I don't remember exactly when, but I'm pretty sure it was in 2000 then. But he cut by 50 basis points, Alvin. He surprised everybody and said, no clue, the market was open, and it just happened in the middle of the day. So all of a sudden, my chart looked like this, and I was like, what in the hell is going on? Luckily for me, I have direct access, and what that allowed me to do is I put a limit order out, $1 above the current ask price. I was basically looking at the best seller in the marketplace going, I'll pay $1 more per share, because I knew that market orders were going to hit the front orders first. If I went limit, I can jump all the way and snag it. And I did. I got out, I bought another $1 out of the money, and I still made money on that trade. It was an awesome experience. Maybe that'll be a chapter in the book with more visuals on it. But yes, the Fed can do whatever they want. They can make announcements whenever they want. Of course, none of these guys wants to have mud in their face. And if they decide to raise rates by 50 basis points tomorrow, someone's going to be pissed. Why? Because markets are net long right now. Everyone's loving the gravy train. This could come crashing down very quickly if they did a rate announcement like that. Okay, so Bill Addis on the show tomorrow. If you guys have questions, email is on the screen. It's TraderMerlin@gmail.com. Send me any comments, questions, feedback, things you like, things you didn't like, people you want to see on the show, like Greg Manarino, which I still need to get on the program for Brendan. Anybody else or comments, things, talk tracks for tomorrow with Bill Addis. And for those who don't know, Bill is a bond master. I mean, he spent his youth as a floor trader and a runner for the bonds. He was basically the guy that put in at bond auctions. He knows bonds inside and out way more than I will ever know, which is why I love having him on. So he'll be the guest tomorrow, going down whatever talk track you guys want to go. Repo facility? Sure. Let's talk about that repo facility tomorrow. Cool. Make sure you remind me, Brendan. I will put it down right on my piece of paper in front of me, but I'll probably forget. As you know, I forget a lot of things. All right, that said, everybody, I do not want to be going an hour show anymore. I got to cut these things down a little bit. It's been almost an hour. Thank you guys so much. Hope you enjoyed Tillie. You can check out her book on Amazon called The Fed Effect. I'll let you know about her new book coming out. Until then, happy trading, everybody. I will see you tomorrow with popcorn in hand for the Amazon earnings. Take care.